Good morning, students. Yesterday, we started with the second chapter, that is theory-based accounting. And in the theory-based accounting, we learned that as every discipline is backed up with a theoretical base, even accountancy is also backed up with a good theoretical base. And these theoretical base are studied as concepts and conventions, and even you can call them as GAAP, that is GAAP, and that means generally accepted accounting principles. Generally accepted accounting principles. And under this generally accepted accounting principles, yesterday we started with accounting concepts, and as I told you that there are totally 13 concepts. Earlier these 13 concepts were divided as 10 concepts and 4 conventions. Now in your textbook they have completely given them as accounting concepts, and 2 concepts they have merged. By that 10 plus 4 here are just represented as 13 concepts. Okay, and in these 13 concepts, yesterday we studied about 4 concepts. Let me once revise 4 concepts and then we move to the 5th concept. Okay, so the first concept was business entity concept, which said that business is separate from owner, and this is done because the personal transactions of the owner should not be merged with the business transactions. Okay, and according to this concept only, we treat capital as liability, because when we treat both as separate entities, when one invests money into the other, it becomes the responsibility of the business to return back that capital to the owner. So this leads to a liability. Okay, and and the vice versa effect of this, drawings are called as assets. Next is, we learned about money measurement concept, which said that only those transactions which can be represented in the form of money will be recorded in the books of accounts. Andre yav transactions anna ನಾವು ಹಣದ ರೂಪದಲ್ಲಿ ವ್ಯಕ್ತಪಡಿಸಬಹುದು, ಅವುಗಳನ್ನು ಮಾತ್ರ ನಾವು ಅಕೌಂಟಿಂಗ್ ನಲ್ಲಿ ರೆಕಾರ್ಡ್ ಮಾಡ್ತೀವಿ, ಬೇರೆ ಟ್ರಾನ್ಸಾಕ್ಷನ್ಸ್ ಗಳನ್ನ ನಾವು ರೆಕಾರ್ಡ್ ಮಾಡೋದಿಲ್ಲ. ಅಂಡ್ ನಾವು ರೆಕಾರ್ಡ್ ಮಾಡುವಾಗ ಆ ಯಾವ ಕಂಪನಿ, ಈ ಕಂಪನಿ ಯಾವ ದೇಶದಿರುತ್ತಲ್ಲೋ ಅಲ್ಲ ಆ ಕಂಟ್ರಿ ಕರೆನ್ಸಿಯಲ್ಲಿ ನಾವು ರೆಕಾರ್ಡ್ ಮಾಡ್ತೀವಿ. That means the ruling country currency should be used for recording the transactions. Okay, and qualitative transactions will not find any place in accounting books. Next is, the third one which we learned was going concern concept. As per this concept, we assumed that a business will carry on its operation for an indefinite period. ಅಂದ್ರೆ ಒಂದು ಅನಿಶ್ಚಿತ ಕಾಲದವರೆಗೆ ನಮ್ಮ ಬಿಸ್ನೆಸ್ ನಡೆಯುತ್ತೆ ಅಂತ ನಾವು ಅಸ್ಯೂಮ್ ಮಾಡ್ಕೊಳ್ತೀವಿ, ರೈಟ್? ಈ ಕಾನ್ಸೆಪ್ಟ್ಸ್ ಅಂಡ್ ಕನ್ವೆನ್ಷನ್ಸ್ ಅನ್ನ ನಾವು ಅಸಂಪ್ಷನ್ಸ್ ಕೂಡ ಅಂತೀವಿ. ಅಂದ್ರೆ ಅಕೌಂಟಿಂಗ್ ಮಾಡುವ ಮೊದಲು ನಮ್ಮ ಹತ್ತಿರ ಏನೆಲ್ಲ ಅಸಂಪ್ಷನ್ಸ್ ಇರಬೇಕು ಅವಕ್ಕೆ ನಾವೇನಂತೀವಿ, ಕಾನ್ಸೆಪ್ಟ್ಸ್ ಅಂಡ್ ಕನ್ವೆನ್ಷನ್ಸ್. ಮುಂದೆ ನಾವು ಕಲ್ತಿದ್ದು ಅಕೌಂಟಿಂಗ್ ಪೀರಿಯಡ್ ಕಾನ್ಸೆಪ್ಟ್. ನಿಮಗೆ ನೆನಪಿರ್ಬೇಕು, ಐಡೆಂಟಿಫೈ, ರೆಕಾರ್ಡಿಂಗ್, ಕ್ಲಾಸಿಫೈಯಿಂಗ್, ರೆಡ್ರೆ ಸಮರೈಸಿಂಗ್ ಇತ್ತಲ್ಲ. ಸಮರೈಸಿಂಗ್ ಅಂದ್ರೆ ಏನು? ರಿಪೋರ್ಟ್ಸ್ ಗಳನ್ನ ಪ್ರಿಪೇರ್ ಮಾಡ್ತೀವಿ ಸಮರೈಸಿಂಗ್ ನಲ್ಲಿ. ಸೊ ಪ್ರಶ್ನೆ ಏನ್ ಬರುತ್ತೆ ಅಂದ್ರೆ, ಈ ರಿಪೋರ್ಟ್ಸ್ ಗಳನ್ನ ಯಾವ ಪೀರಿಯಡ್ ಗಾಗಿ ನಾವು ಪ್ರಿಪೇರ್ ಮಾಡ್ತೀವಿ? ಸೊ ನೆನ್ಪಿಟ್ಕೊಳ್ಳಿ, ಈ ರಿಪೋರ್ಟ್ ಗಳನ್ನ ನಾವು 1 ದಿನಕ್ಕಾಗಿ, 2 ದಿನಕ್ಕಾಗಿ, 10 ದಿನಕ್ಕಾಗಿ, 1 ವಾರ, 15 ದಿನ, ತಿಂಗಳು, ವರ್ಷಕ್ಕೆ, 5 ವರ್ಷಕ್ಕೊಮ್ಮೆ ಕೂಡ ಮಾಡಬಹುದು. ಆದ್ರೆ ಸಾಮಾನ್ಯವಾಗಿ ಒಂದು ಬಿಸ್ನೆಸ್ ತನ್ನ ರಿಪೋರ್ಟಿಂಗ್ ಅನ್ನ ಇಯರ್ಲಿ ಮಾಡುತ್ತೆ, ರೈಟ್? ಸೊ ಪ್ರಶ್ನೆ ಬರುತ್ತೆ, ಆ ಇಯರ್ ಯಾವ್ದಾಗಿರುತ್ತೆ? ನೆನ್ಪಿಟ್ಕೊಳ್ಳಿ, ಇಯರ್ ನಲ್ಲಿ 2 ರೀತಿಯ ಇಯರ್ಗಳಿರುತ್ತೆ. ಒಂದು ಫೈನಾನ್ಷಿಯಲ್ ಇಯರ್ ಅಂಡ್ ಇನ್ನೊಂದು ಕ್ಯಾಲೆಂಡರ್ ಇಯರ್. ಕ್ಯಾಲೆಂಡರ್ ಇಯರ್ ನಿಮ್ಗೆ ಗೊತ್ತು, January 1 ಪ್ರಾರಂಭವಾಗಿ 31 ಡಿಸೆಂಬರ್ ವರೆಗೆ ಎಂಡ್ ಆಗುತ್ತೆ. ಅದೇ ರೀತಿ ಭಾರತದಲ್ಲಿ ಫೈನಾನ್ಷಿಯಲ್ ಇಯರ್ ಅಂದ್ರೆ 1 ಏಪ್ರಿಲ್ ನಿಂದ 31 ಮಾರ್ಚ್ ವರೆಗೆ ವಿಸ್ತಾರವಾಗಿರುತ್ತೆ. ತಿಳಿತಾ? ಅಂಡ್ ನಾವು ಅಕೌಂಟಿಂಗ್ ಸಲುವಾಗಿ, ಇನ್ಕಮ್ ಟ್ಯಾಕ್ಸ್ ಸಲುವಾಗಿ ನಾವು 1 ಏಪ್ರಿಲ್ ನಿಂದ 31 ಮಾರ್ಚ್ ವರೆಗಿನ ಪೀರಿಯಡ್ ಅನ್ನ ಫೈನಾನ್ಷಿಯಲ್ ಇಯರ್ ಅಂತ ಕನ್ಸಿಡರ್ ಮಾಡ್ತೀವಿ. ಐ ಹೋಪ್ ಯು ಹ್ಯಾವ್ ಅಂಡರ್ಸ್ಟುಡ್. ನಾವು ಇವತ್ತು ನಾವು 5ನೇ ಕಾನ್ಸೆಪ್ಟ್ ನ ಕಡೆಗೆ ಹೋಗೋಣ. ಫಸ್ಟ್, the 5th concept is cost concept. Cost concept. According to this concept, an entity should record its assets at their cost price. Remember, at their cost price. Okay, and what is the cost price? It is also called as historical cost. It is also called as historical cost. Then question comes, what is meant by cost? See, the cost includes purchase price plus installation plus transportation charges. Remember, an asset should always be recorded at cost price, and the cost price involves all these things. That is, cost includes purchase cost, installation and transportation. So this gives us the cost, and the asset should be recorded at this price. Next, there are certain arguments on this, but at this moment we will not focus on this. Only we just learn what is cost concept. The next is, after this cost concept, the next concept comes is the very important one, dual aspect concept. Dual aspect concept. Now, 6th concept and a very important concept, dual aspect concept. Now, you have heard about dual SIM. What is meant by dual SIM? 2 SIM cards will be there. In the same way, when they are saying dual aspect, there will be 2 aspects. Okay, so dual aspect concept says that every transaction has 2 aspects. This is the base of double entry system. I will tell you what is double entry system later, right? So what dual aspect and double entry, almost they are same, right? So every transaction has 2 aspects, compulsory relay, right? Then it says one should be debited and other should be credited. whatever two aspects come out of a transaction, one of that should be debited and the other should be credited. This is the summary of dual aspect concept. Dual aspect concept ಏನು ಹೇಳ್ತಿದ್ರಿ? ಪ್ರತಿಯೊಂದು ಟ್ರಾನ್ಸಾಕ್ಷನ್ ಅಲ್ಲಿ ಎರಡು ಆಯಾಮಗಳಿರುತ್ತೆ, ರೈಟ್? ಒಂದನ್ನ ತಾವು ಡೆಬಿಟ್ ಮಾಡಬೇಕು ಅಂಡ್ ಇನ್ನೊಂದನ್ನ ತಾವೇನ್ ಮಾಡಬೇಕು? ಕ್ರೆಡಿಟ್ ಮಾಡಬೇಕು. ಅಂದ್ರೆ ಇವು ಯಾವಾಗಲೂ ಆಪೋಸಿಟ್ ಆಗಿ ಮೂವ್ ಆಗುತ್ತೆ. ಆ ಎರಡು ಆಸ್ಪೆಕ್ಟ್ ಗಳು ಆಪೋಸಿಟ್ ನಾಗಿ ಮೂವ್ ಆಗ್ತಿರುತ್ತೆ. ಅಂದ್ರೆ ಒಂದು ಡೆಬಿಟ್ ಆದ್ರೆ ಇನ್ನೊಂದು ಏನಾಗುತ್ತೆ? ಕ್ರೆಡಿಟ್ ಆಗುತ್ತೆ. नेक्स्ट ये हो गया ड्यूअल एस्पेक्ट. एंड ड्यूअल एस्पेक्ट कॉन्सेप्ट gives us a accounting equation which says assets are equal to liabilities plus capital. Liabilities plus capital. See, how can we acquire an asset? For example, I want to buy a house. Okay, I want to buy a house. If I want to buy a house, how to fund that house? I have two sources. One, pay out of my own pocket or out of savings, and if they are not available, I may avail a loan. That means either I can buy with my own money or I can buy with a loan available from bank. So there are options, two options available. ಒಂದು ನನ್ನ ಸ್ವಂತ ದುಡ್ಡನ್ನ ಕೊಡಬಹುದು, ಅಥವಾ ಇನ್ನೊಂದು ಏನ್ ಮಾಡಬಹುದು ಅಂತಂದ್ರೆ ನಾನು ಬ್ಯಾಂಕಿನಿಂದ ಲೋನ್ ಅನ್ನ ತೆಗೆದುಕೊಂಡು ಕೊಡಬಹುದು. ಎರಡು ಆಪ್ಷನ್ ನನ್ನ ಹತ್ರ ಇದೆ. ಸೊ ಅದಕ್ಕೆ ಇಲ್ಲಿ ಆಪ್ಷನ್ ಹೇಗೆ ಕೊಟ್ಟಿದ್ದಾರೆ ಅಂದ್ರೆ, ಫಾರ್ಮುಲಾ ಹೇಗೆ ಮಾಡಿದ್ದಾರೆ ಅಂದ್ರೆ, ನನ್ನಲ್ಲಿರುವಂತಹ ಟೋಟಲ್ ಅಸೆಟ್ಸ್ ಏನಿದೆ ಅದು ನಾನು ಹಾಕಿದಂತಹ ಸ್ವಂತದ ಮೊತ್ತ ಮತ್ತು ಸಾಲ ತೆಗೆದುಕೊಂಡ ಮೊತ್ತಕ್ಕೆ ಸಮನಾಗಿರುತ್ತದೆ. ರೈಟ್? ದಟ್ ಈಸ್ ನಥಿಂಗ್ ಬಟ್ assets are equal to liabilities plus capital. Okay, so in short you can learn it as A is equal to L plus C, then C is equal to A minus L, and L is equal to A minus C. A minus C. So this is how you need to remember. मतलब कैपिटल का फॉर्मूला क्या होता है? एसेट माइनस लायबिलिटीज. These are very important formulas. Even in examination of 5 marks question will be asked on this. Okay, so asset is equal to liability plus capital. Capital is equal to asset minus liability, and liability is equal to asset minus capital. Okay. Now, one more time I will summarize this. My assets are equal to the total amount contributed by me and the total amount of loan availed. So that's why asset is equal to liability plus capital. Next is revenue recognition concept. Revenue recognition concept. Okay, now question arises, what is meant by revenue recognition concept? Okay, so now I said, what is revenue? The amount received by sale of goods or services. Okay, so when that should be recognized? Okay, so that is the question. Okay, so revenue should be recorded when it is realized. Okay, now as per your textbook, what is the definition of revenue? Now, the first is termed as revenue and the other when the revenue is realized. Okay, let us take the first one. Revenue is the gross inflow of cash arising from, number one, the sale of goods and services by an enterprise and use by others of the enterprise resources yielding interest, royalties and dividends. And secondly, the revenue assumed to be realized when a when a legal right to receive it arises. That is the point of time when goods have been sold or service has been rendered. Thus, the credit sales are treated as revenue on the day sales are on the day sales are made and not when money is received. ये बहुत, अगर आप इसको पढ़ के समझने की कोशिश करेंगे तो आपको बहुत टाइम लगेगा. तो चलिए हम देखते हैं क्या होता है. Now, when ಅಂದ್ರೆ revenue realize ಆಗಿದೆ ಅಂತ ಹೇಳಿ ಯಾವಾಗ ತಿಳ್ಕೊತೀರಿ? That is the question here. Right? When you assume that the revenue has been realized. Okay. So now, for this, there are two categories. How many categories are there? Two categories. And now we need to discuss under both the categories. Okay. So first one. In case of sale. Now, the answer to that is when such sale is effected. याद रखिए, when such sale is effected, irrespective of the amount received. Amount received ಮಾಡ್ಯಾರೋ ಇಲ್ಲೋ ನೋಡ್ಬಿಡ್ಲಿಕ್ಕೆ ಹೋಗಬೇಡ್ರಿ. Irrespective of the amount received. Next. One more thing is when amount is received by way of dividend, interest, etc. Clear? Right? So, in the first case, it is to be assumed when the sale is effected. When the sale is effected, remember, sale when there is transfer of ownership. When there is transfer of ownership. Clear? So sale is to be considered when there is a change in when there is a transfer of ownership. Okay? Now, next is and sometimes even the legal right to receive also be considered as revenue. Okay, legal right to receive. The next is matching concept. This is the 8th concept. Matching concept. Matching means comparing the two figures. That is called as matching. Okay. So matching concept asks us to match. Question arises, sir, what to match? Remember, here expenses for a particular period are matched with the income of the same period. Now, under this concept, revenue for a particular period is matched with the expenses of the same period. Okay, if revenue is greater than expenses, then profit. And if revenue is less than expenses, then it is loss. Okay. Now, let me revise once again. Number one, generally accepted accounting principles, under which we have already covered 4 concepts yesterday only. The 5th concept was cost concept, which says that all the assets should be recorded at historical cost. Then question arises, what is meant by cost? The cost includes purchase price, installation price, and transportation price. Okay, then next was dual aspect concept, which means every transaction has 2 aspects. One should be debited and the other should be credited. Okay, andre idawe ಎರಡು aspect ರೀ, ಒಂದನ್ನ ಡೆಬಿಟ್ ಮಾಡ್ರಿ, ಇನ್ನೊಂದನ್ನ ಕ್ರೆಡಿಟ್ ಮಾಡ್ರಿ. And it gives us how many equations? 3 equations. The first equation is asset is equal to liability plus capital. This is the universal equation. So then next is full disclosure concept. Now, matching concept over. Full disclosure. Full disclosure concept. Right? Now, the full disclosure principle says that first, all relevant all relevant information, all relevant information should be disclosed. All relevant information should be disclosed. Then question arises, what is meant by relevant items? Here, relevant means, here relevant means which is material. Or material information should be communicated. Okay. Next. The last concept of the day, that is consistency concept. Consistency concept. Now here one more question arises. Sir, what is meant by material information? Remember, the information, the information which influence the minds of decision makers. Okay, so next is consistency. What is meant by consistency? Doing the same thing again and again. Okay, so this method says that the policy procedures, the policy procedures standards adopted by the organization the policies, procedures, standards adopted by the organization should be used every year. Any changes in them should be reported. Any changes in them should be report. Okay, so with this, we finish today's class, and in the tomorrow's class, we learn about 3 more concepts, and then we move to the next heading in this chapter. So before I conclude today's class, let me explain all the concepts which we discussed today. The first one was the cost concept, which said that all the assets should be recorded at historical cost in the books of accounts. Okay, they should be recorded at historical cost, and the historical cost consists of cost of the asset, cost of installation, and cost of transportation. Then next we learned about dual aspect concept, which said that every transaction will have 2 aspects, and one should be debited and the other should be credited, right? And it has given us 3 accounting equations, that is asset is equal to liability plus capital, liability is equal to asset minus capital, and capital is equal to asset minus liabilities. And the next was revenue recognition concept, which said that the revenue should be recognized as and when it accrue or as and when it is realized. Remember, in case of sale of goods and services, the moment the ownership transfer, the revenue will be recognized. And in case of dividend, rent, etc., it will be recognized as and when it is received. Next is revenue recognition. Then next is matching concept, and it says that matching concept says that the expenses of a particular period should be matched with the income of the same period, and if the income revenue is greater than expenses, then it results in profit, and if the revenue is less than the expenses, then it results in loss. And then next was full disclosure concept. As per this concept, all relevant information should be disclosed. Then question arises, what is mean by relevant? Relevant means material information should be communicated. And what is mean by material information? Material information is the information which influence the minds of the decision maker. ऐसा कोई चीज है जो decision लेने में मदद करता है, तो that becomes a material. Then last concept of the day is consistency concept. It says that we need to adopt the same procedures, standards year after year, because the reason is the reason is if you keep on changing, your results will also change, and some things may not be permitted by the laws also. Then next is any changes in them should be reported. For example, if you are changing your accounting policies, then definitely you need to report that. So with this, I finish today's class.